Hey, everybody, and welcome back to another amazing episode of the Power of Women in Insurance podcast. My name is Teresa Kitchens, your host, and I'm excited today because we're talking to a previous podcast guest who I have been able to work her into with her busy schedule to be able to come and join us again. And her name is Lorin Montgomery. She is with Brown and Brown. Our previous episode did go through a lot of that journey, how she got there, working with, she was with Liberty Mutual for a number of years. She's been with other brokerages and ended up through Brown and Brown with various acquisitions and such. And she is a commercial insurance powerhouse. And so we are excited to be able to have her today. So, Lorin, welcome back to the podcast.
Thank you so much. It's a pleasure to be here. And it's funny because my boyfriend said to me, "Oh, LinkedIn says happy anniversary to your Brown and Brown." And I was laughing because I said, I actually have two LinkedIn anniversaries, one from my previous brokerage, which was a July date. And then we got acquired in December of 2021 by Brown and Brown. So I'm just now, I'm sure the LinkedIn congratulations on your anniversary will be coming in. So
Yes, isn't
30
it
years
funny how
now
you
with
get
Brown and
those? You're
Brown.
like, oh, okay. I don't even track some of those dates sometimes. So it's kind of interesting how they do that.
Well, it's funny because I was just having a conversation with, again, my boyfriend talking about the fact that I'm very good with dates. I'm actually 40 years now in insurance. So yeah, I know. So the 3 years with Brown and Brown is not quite as significant as, the cumulative, but, it's still a nice place to be for sure.
Absolutely, absolutely. And I know that you've worked with a lot of really great clients. You've seen a lot of things. You've been through multiple phases in the market. You've done so many different things. So tell me a little bit, just in a little snippet, a little bit about your career, kind of what kind of businesses that you maybe specialize in or what size, and tell me a little bit about your commercial insurance career as we get started on this conversation.
Sure, absolutely. So I started with Liberty Mutual in 1984, and I did a 23-year stint with Liberty. And it's so interesting to me because I was really successful there. I mean, I did very well. And but I was a captive agent. I had such a small opportunity as far as marketability or market share because I was a captive agent, right? And but we had a niche. I personally had a niche in construction because Liberty didn't like property. Certainly after Hurricane Andrew in
Yeah.
1992, yeah. So we were one of the first to drop out of the market there after Hurricane Andrew, and Liberty never really went back into property. So, but I always, and that this is something that I would recommend to this young gal that I'm working with for mentorship. Uh, you want to have a niche. And I always had a niche in construction because in construction, there's a lot of premium. The workers' comp rates are always high. The general liability rates are always high. And the auto rates, especially here in Florida, where I am, are absurdly high.
Yeah.
So Liberty did really well with construction. So I had a niche in construction. I stayed with what I knew after I left Liberty and I went into the brokerage side. So I did my 23-year stint with Liberty Mutual. And the guy that owned the brokerage that I went to, which was since acquired by Brown and Brown, said to me, "Why would you want to sell for one when you could sell for all?" And that's all he had to say to hook me. And then when I moved to the brokerage side, I was never able to find any business that I could send to Liberty Mutual, which was so weird because I had done 23 years with them. But
Yeah.
anyway, so fast forward, I did 16 years with the brokerage. We were acquired by Brown and Brown in 2021, started at the beginning of 2022. And I've always maintained a niche in construction because exactly for what I said, the premiums are high and
Yeah.
I did what I was comfortable with.
Well, and their
I
contracts require it, especially the good sized commercial contractors, right? They have constant projects going and they have to have high limits. They have to carry those. So, it's not like they're not the little ones that kind of dip out a lot, kind of thing based on projects.
And what's interesting, it's not even so much about the limits. It's about the terms and conditions. You have to be aware of things like primary non-contributory, waiver of subrogation, additional insured. You can't have residential limitations or exclusions. There's a lot more that knowledge that goes inside of the different contracts
Yeah.
and contractual wording. So it's not really just the limits. The limits are the least of it. It's knowing I'll have clients sending me contracts all the time. Do we meet the requirements? And it's not so much about the limits because we can always buy more, if that makes
Right,
sense.
right. I
So,
love it. I love it. Okay, so as you're in the commercial space, right? Tell us a little
yep.
bit about some of the changes that you've seen over the years. Because, like you said, you went from Liberty Mutual into the brokerage side. You've been around for like 40 years. What are some of the things you've seen? Because I really feel, and you and I actually talked a little bit before this got started, that where we are in the insurance space is really a conglomeration of a lot of years, a lot of experiences, a lot of things, a lot of events, a lot of people, a lot of just changes in our culture and our economy and so forth. So tell me a
Right.
little bit about what you've seen. And then I really want to dive into some of those questions that you get, because I think a lot of people in today's environment are struggling with this idea of how to really portray the industry for our clients. We know how to be able to explain coverages and we know how to be able to explain the policies, but I think explaining the industry to people who are not in it gets very complicated.
Yeah, it's interesting that you say that because we do it every day, and so
Yeah.
we know what to expect. And we are talking to broker after broker after broker, or wholesaler after wholesaler, or carrier side, and they're all saying the same thing. And so we live it, we breathe it, we sleep, we eat. But when you're dealing with a client, the insurance piece of it is probably just one small part of their business, but it's a really expensive part. I've had people tell me in the past that their two biggest expenses are payroll and insurance.
Mhm.
And so, in asking what have I seen, what I'm seeing now is I'm seeing the absolute worst market conditions that I've ever seen in 40 years. And I never, ever thought that it would get this bad, truly. I mean, I was in South Florida when Hurricane Andrew happened, like I said, 1992, and we saw the deterioration after that. Prior to Hurricane Andrew, property policies were written with $1,000 hurricane deductible, same as the all other perils, the AOP, right? So you'd have a
Wow.
thousand dollars for fire, theft, vandalism, and you'd have $1,000 deductible for hurricane. And then Hurricane Andrew happened, and within a couple of years, that was never to
Yep.
be seen or heard from again. But pretty interesting. But anyway, so what am I seeing? What I'm seeing is a complete and total collapse of the market. Complete and total collapse. I'm seeing carriers becoming more and more I don't like the word fearful, but fearful of exposure. They
Mhm.
the policies. Well, this is part of our industry too. Is that we are very, very reactive. We are not proactive. So
Yep.
we've seen over the last numbers of years. I was having a conversation with somebody a couple of weeks ago about um, COVID and how the reason that the insurance industry wasn't hit more severely from COVID is they had already been through Legionnaires and SARS and H1N1 and all of that stuff. So we already had virus and bacteria and microorganism exclusions on our
Yep.
policies. But had we not, then it would have been way worse than it was.
Yeah.
So, but what I do see is that the insurance industry being reactive is becoming much more restrictive more quickly. When cyber liability first became a thing, I don't know what, 10 years ago, did we ever
Mhm.
really hear of cyber or cyber policies?
No. And back then they were really cheap and it was not like something people even thought of. I mean, it was like $500 a year. Now they're like 30,000, 60, $100,000 a year, depending on your business.
That's exactly correct. And that was the point that I was going to make. You're right there with me. So what I see is that so cyber comes out. I say to my clients, you need to buy this because I got to tell you, it's dirt cheap. The coverage is ridiculous. And I'm going to tell you that the minute these claims start coming in, the coverage is going to go up in premium. The coverages are going to be taken away. I said, and so sure enough. So what I am seeing is that the insurance industry is always going to be reactionary. I don't think that it'll ever be different, but we're very much more quickly, I'm not saying this well, but very much more quickly reacting. So
Yeah.
we saw, remember when EPLI used to include wage an hour and
Oh, yeah.
that with no sublimit? That took years before they caught up to that and said, oh my God, we're giving away the farm. Let's eliminate that. With cyber, the deterioration and the elimination of coverage and social engineering that went away within, it feels like 2 years, like it was
Yeah.
so fast. And so what I am seeing is I'm seeing that the insurance industry is reacting much more quickly and much more severely and much more aggressively to, yeah, we're not going to write this coverage at any price. And then anytime that you're in a situation where you're in a part of the country where, like in South Florida, when you have hurricane exposure, or maybe in California where you've got earthquake exposure, or in the Northeast where you've got the issues with the scaffolding and the vicarious liability and the all of that kind of stuff, that the insurance companies are reacting much more quickly and much more severely, and they're not really coming off of it as much. Although I did have the girl in my account manager tell me that she had two property renewals where they dropped the wind deductible from 10% to 5%. That was this week, which I was shocked. So I'm not sure what's happening there, but I don't think it's a trend. It might just be a very one-off, but we'll see.
Right. So. Right. Well, okay. So as people are going into the industry and as we're settling in, right? Because again, like you said, I don't think it's going to go back. I think that people need to come to a realization that we're not going to go backwards in our coverages. We might see some things being given back to us, but we're not going to go back to where we were 10, 15 years ago. That's just not going to happen. And I think people call it a hard market and they're ready for the market to soften up. And I don't have a bone to pick with that, but I think it's not going to be back where it was. It's not. And I've heard a lot of people say, when will we go back? We're not going to go back. So as we talk to our clients, though, how can we express that to our clients? Because our clients with inflation, with hiring challenges, with, all the things they're going through, how can we help our clients to be more prepared and to understand? Because insurance is not something people sit around and talk about at a dinner party, right? Like we can sit around and talk about your cool new truck with all this cool new technology, and isn't it awesome? So we see commercials online about bigger engines or hybrid and what it's going to do for the environment or whatever the conversation is, right? But insurance never talks about coverage or the industry on a public level, out and about on commercials or whatever. They talk about 15% can save you 15 minutes, or call Liberty Mutual and they'll price check or whatever the concept is, right? But they don't educate. There's not a lot of education out there about the insurance and where it's going, especially not on the commercial side. How do you recommend account managers and sales managers to be able to help our clients through this time where they've got to kind of catch up to something that's been going on kind of behind the scenes for a while?
It's a great question. So one of the things that I've always tried to do in building my career and building my relationships and building my name, if you will, in the industry is I've always tried to me, it's not about selling anything to anybody. It's about consulting. It's about educating. It's about informing, because I can't do anything about the state of the market. I can't fix it. I can't go to my client that has a fleet of trucks and say, yes, I can take your $6,000 or $7,000 per power unit price and get you back to the $1,800 that you paid, 10
Not
years
happening.
ago.
Right.
Like you said, we're not going to go back. And so what I try to do is and I don't think it changes anything other than the fact that it lets them understand that I'm not trying to stick it to them. I try to educate that it didn't take us a minute to get here. Like we didn't go from 2020 to 2024 and the rates and the market deterioration. It didn't happen in a minute. And so I've done a lot of public speaking, and what I try to do is educate with the public and educate with my clients. And so I have a PowerPoint that I share, and I can give you any of this information if you want it. It might be a little outdated now because it goes through 2022, but it talks about the fact that from 2017 to 2022, there were no less than 16 $1 billion property events. And I don't care how wealthy you are as a reinsurance company, every reinsurer is going to be on a piece of a claim that big, and they're all going to be feeling it. And so you have from 2017 to 22, all these massive property events throughout the, not only the hurricanes, which you get every year, and not only the floods, which you get every year, but the California wildfires and the Australian wildfires and all of the other stuff that happens over and above the regular things that you expect. And then in the middle of all of that, in 2020, you have COVID. And while COVID was not as massive an insurance event as you might think, because of what we talked about just a bit ago about the fact that the insurance companies had already had the Legionnaires and had all of that. So they had the exclusions on the policy for bacteria, microorganisms, all of that stuff. It still was a world financial event. And insurance companies make most of their money, the bulk of their money, on their investments. They don't expect their loss ratios to be substantially different than 100. They think they're going to make their money, or they look to make their money on the investment side. Well, what happened to investments in 2020? Everything tanked. So the insurance companies weren't making money on their investments, and so they were upside down. So what happens? You have these big world events, you have the fires and the hurricanes and the this and the that, and then you have the financial impact of COVID. So over a 5 to 7 year period, you have this massive buildup of financial deterioration and whittling away or chopping away at any reserves that the insurance companies might have had. On top of all of that, you have increasing litigation, you have increasing fraud, you have increasing cyber claims. All of that. And then with the COVID as well, you had a lot of very desperate people doing very desperate things. Yeah. So computer hack, again, cyber, hacking, theft, all of that kind of stuff, all of that increased during COVID. So that affected things as well. So you have now this buildup. And again, the PowerPoint it says it's called the makings of a hard market. And it takes 5 to 7 years for it to build. And it's not going to turn around on a dime. And then we've had all of these weird this season where you had the Carolinas getting obliterated by Helene, right? Helene was the first one. And you don't expect that ever. Somebody in North Carolina is having flooding and the trees and the power and all of that. And so whatever you think about global warming and the environment, we are seeing a change in the weather patterns and all of that kind of stuff, and you're having weather events that we never would have seen before, never would have expected,
and in areas that we never would have seen it before. Exactly, and I think people aren't considering that, because I know that there's a couple of podcasts out there about it, specifically about global warming and insurance and things like that, about an area, what is it, in Illinois or something like that, they got hit by like 2 tornadoes in like 5 years. But they have never had a tornado before. And then all of a sudden, like the entire city, this whole area of, I think it was Illinois or Iowa, that like is no longer insurable. And like every single insurance carrier just backed out, said, we're not here, we're not anything, because there was such massive losses. And people don't think about that. They think about, Tornado Alley, right? They think about, Oklahoma, Texas a little bit, up into Kansas, whatever. But they don't think about the Illinois area as being an uninsurable area because of a tornado. But it's because of all of this change, even if it's like you mentioned in the Carolinas, like in totally weird areas where we've never seen that kind of loss before.
Yeah. You have a lot of things that are uninsurable, and we'll get back to it as soon as I finish the thought to answer your question. But we're seeing, especially here in South Florida, we're having a huge problem with the high-rise condos, because after the collapse of Champlain Towers a couple of years ago in Key Biscayne, they're tightening up on those 40-year inspections. And our office, we have a huge condo book. And what's happening is, if those 40-year inspections don't come back clean, and the board doesn't have the money to do the reparations necessary, which none of them do, because nobody plans properly. That's a whole different podcast there, right?
Right.
But they can't get any insurance at any price. The carriers will not insure them at any price. So now you have this massive, however many story tower on the beach that can't pass their 40-year inspection, that none of the insurance carriers will insure. The banks can't even force place insurance because they can't get it either. That's a story for another day. So to finish the question that you asked me, what I try to do, even though I can't change the market, I try to educate. I try to inform. I try to help people understand how we got from point A to point B. And it's not just Lorin Montgomery broker trying to ram this rate down somebody's throat. It's saying, hey, I feel your pain. I understand, but let me help you understand because these are business people, right? So they have some financial acumen. And when you put it in their language, a financial language, and you say you have this series of events leading up to this financial deterioration, and this is what we're left with. While they don't like it and it doesn't make them feel any better to have to cut that check with a 25 or 50% rate increase, at least they have a better understanding and they recognize that I'm not just saying, throwing my hands up in the air and saying it is what it is. At least I'm trying to engage them in a way that they can understand where we are. And at the end of the day, it's still difficult.
Yeah, it totally is. And I think that when we were talking previously, and I'm getting a little confused between what we talked about, what we're talking about now, because it's such a great conversation. One of the things we talked about was the concept that the guy next to us, right, being better than the guy next to us who the other insurance brokers that may be running into or whatever. And I think that education piece is so important in that because there are so many other insurance brokers that'll sit back and go, it is what it is all I got, right? And I mean, I know a lot of people like, oh, I'm going to go on out and I'm going to do my own thing or shop it or whatever, and they can't find something else. And, I think it's really, really important to give that information, not just at renewal time, but like all year long, because we have to engage our clients where our clients are. And at renewal, maybe they've got, 20,000 different things going on, right? And they may have maybe during the holidays, maybe they're slower, right? And they're going, oh, I've got these cool options here that I could go ahead and I could look over, or something may just flag them at the right moment, right? Of the moment that they have a certain question about a certain thing and they go, oh, great, Lorin's sending out information about this, right? I think keeping that perspective 12 months out of the year, all the time is super important. It's not just at the time of renewal.
1,000%. And it's funny because I actually have a folder in my Outlook that's called 12 month solicitation. And I have this massive, massive database of people that I've collected over the years, insurance buyers and people that I've met networking, people that I'm on boards with. And it's just the stuff that I send around is purely informational, but it is part of my 12-month solicitation. This goes back to the Liberty Mutual days, which is, that's quite a number of years back now. But we took the strategy and the philosophy of you don't just reach out to a buyer 90 days or 120 days before, because guess what? Every other agent that's solicited them over the year is going to be calling at that 90 to the 120 day mark, and the CFO is going to be flooded. But if I'm the one that's sending emails all throughout the year, hey, are you aware of this new product? Or hey, are you aware of this new underwriting situation? Or, oh, are you aware of this very large lawsuit settlement? Whatever. You're not trying to sell them something. You're just providing information. And then, of course, at the bottom of the email, you say, if you have any questions about this or anything else, please feel free to, reach out. I'm happy to discuss it with you. So if you take the consultative approach and you take the educational approach as opposed to trying to sell somebody something, I think it's always going to be more well received on a long-term basis. And isn't that what we're trying to accomplish in this industry, right? Wouldn't everybody like to say, I've been doing this for 40 years and I've built this lovely book and here we are, right?
Yeah. Well, and I think too, it means that when they do get to the renewal, that they feel that they could come in more empowered with that information and better educated so that we don't have to have as many of those pulling of teeth, weeping, gnashing of teeth type conversations, right? There's always going to be, I hate to say it, a visceral humanity response when we get a 20, 30, 50, 60% increase, right? There will be, because when we look at our pocketbooks, we're gonna hurt. I don't care if it means that, I mean, back to the car example, right? I mean, I bought a 2011 Hyundai Sonata for, I think, I can't remember, like $18,000, I think, right then at that. You can't buy a car anymore for $18,000. It doesn't exist. So then when my car died, that's a whole nother story. Anyway, it died. It was non-repairable because of something else. Anyway, it died. It was non-repairable. When I went out to look at cars, and I was very happy with my little paid off car. I mean, I had a kid in college. I did not want to be able to spend the money for it. My daughter was in college at that point, and I was like, I do not have the money for a car, but I was like, I have to have a car. So I go on out and I look at new cars. All of a sudden, you can't get into anything for less than 25 grand, which granted, it was only like 5, 6 years later. But I was just like, oh my goodness. Now, if we look, our Nissans and our Toyotas and nice cars, but not necessarily the bottom of the line, but even, excuse me, those other cars that we don't think of as bougie cars, right? We don't think of them as bougie. They're still going to be 30 to 50 grand. And it's
Yep.
crazy. But at the same point, there's something sexy about that new car, right? There's something sexy about that new car smell, all the cool new gadgets that they put in them. Insurance doesn't always come across with cool new sexy gadgets, right? But
Wait,
yet we're getting these huge increases in price.
it doesn't always. Does it ever? Has it ever? Is there ever been anything sexy or bougie about insurance? No, I don't think so. I think the sexiest thing we ever had was cyber liability, and that came and went so quickly. Let's,
Right.
yeah, okay.
Absolutely. But I think because it's so intangible, I think that education all year long is so important because we need them to see, we need them to know that not just at renewal is this a challenge, it's a challenge all the time for the industry.
Right.
All the challenges, all the things going on and all the pieces. So I love that you do that. So you do that by email, right? You said you put those out once a month or so. What type of frequency do you usually recommend? Because nobody wants to be blocked. Nobody wants to be told that they're pestering people, and that's a big fear. I think a lot of people have. That I don't want to pester people all year long. What do you
Yeah.
what do you usually recommend for that?
I wouldn't do more than once a month, but that's just me. I feel like if you're hitting somebody's inbox, and then for those folks that have a broker briefcase, Xywave, all of that kind of stuff, you can do drip campaigns, and you could do it once a week if you wanted for a 2 month period, and just say, oh, we're going to be sending you a series of articles that we feel will be beneficial, and you can target them to any particular industry, construction or manufacturing or any of that kind of stuff or retail. So there's different ways that you can approach it. But I know for me personally, I sit on a lot of boards, not a lot anymore, but two boards where I'm the membership chair, and I'm also involved in some other things. And there are times where I'll be getting 5 or 6 emails from them a day. And after a while, I'm just like dumping them into the file. And I'm like, I can't even look at this anymore. So I don't ever want to be that. And I think that if you're sending somebody something more than once a month, I feel like, but that's just me personally. So I think that everybody's got to find their own way. But I think that once a month would be reasonable. And then certainly if something important happens, like there's a major verdict that hits the news that we're all talking about in the industry or something very, very important, I would probably send that as a separate email. But
Yeah.
yeah, email, I like email because it's very non-invasive. They can open it at their leisure and then, to use it as they see fit. A
Yeah.
lot of times if I'm sending something, I'll say something along the lines of, feel free to share this with the folks in your organization if you feel it would be beneficial. Maybe top 10 things to think about for safety or top 10 ways to avoid an auto accident. I don't know, something like that. But they can use it for their toolbox talks or safety meetings or whatever. I try to make it informational and beneficial to them.
Yeah, yeah. And you said you also you speak at different events and you speak at different, are you really focusing in on maybe those like construction type or organizations and associations so that way you can really talk to that market about what's going on in insurance for that market.
Absolutely.
Um, I think that's probably something that would be super beneficial as well.
So I've absolutely done that. I don't have a recurring gig with that, but I have definitely spoken before at construction groups. As I mentioned, I sit on a couple of construction related boards, and so everybody knows me as the insurance gal. But I've also, interestingly enough, spoken before a CPA organization
Oh, nice.
because Yeah, because all the CPAs, if they're going to be helping their clients, they
Yep.
need to bring in those professionals that are going to be able to do the work that they know their clients need, but they don't know how to do themselves. So I've actually spoken before the various CPA groups. I would do that a couple of times a year, and we would talk about the state of the insurance market and how we got from point A to point B. Or one of my favorite ones that I did in front of a CPA group was you have a building insured for $1 million and the building burns to the ground. How much do you get paid? And you tell, it's a multiple choice. And of course, the answer is $1 million, right? Because you had a building insured for $1 million and it burned to the ground, you get $1 million, right? No. And they all look at you when you say, no, 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 that doesn't mean that you get the $1 million. And then you start talking about things like co-insurance
Yep.
and all of that fun stuff, and ordinance and law and increased cost of construction. And so that's a fun conversation because they just were astonished. Oh, I've also spoken in front of bankers because they have an insuring, they have anytime they're doing a loan, they want to
Oh,
make
yeah.
sure that the loan meets, or that the insurance policies meet the requirements of the loan. And one of the things that is astonishing that I've always been shocked that the policies, or that they don't address, is things like ordinance and law, increased cost of construction. And a lot of times they don't ask for business interruption coverage. Well, you got a manufacturing plant and you're lending them money and they've got a line of credit or whatever it might be, and that place burns to the ground. Well, guess what? If they don't have loss of income coverage, you're paying to replace the building, but how are they going to pay your mortgage during that time? So
Yeah.
it's that's an interesting concept. So those are some speaking gigs that I've done that I thought went over really well, and I've gotten clients out of that because people have come up to me and said, "We need to talk. I need to
Yeah.
put you in front of this client, or I need you to." So yeah, those are groups that have been really beneficial.
So how do you find groups to be able to talk to like that? So I know you're just probably out networking, 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 being out, 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 out. I think sometimes though, we think if we're not a CPA, we think if we're not a contractor, we think if we're not a banker, right? That it's very outside some of our comfort zones to be able to say, hey, I would love to come speak at your event, or hey, I'm going to show up for your association meeting for your CPAs, or this, that, or the other. How do you get in to be able to have some of those conversations? Because I think getting in is part of that stepping over yourself to be able to get out there and be able to be that influencer for information in this industry.
Well, remember, I was telling you at the very beginning that I go into it as a consultant. I don't ever try to sell anybody anything. I want to be able to help you improve your situation, whatever that means to you. And so if I can provide you with information, that's going to probably help you. And that's going to make you value me, or that's going to make me of value to you. So when people realize, and I never leave with my insurance foot ever. I never when I'm at a networking event, I never push my card at somebody and say, if you need a policy, call me. I say,
Right.
listen, I'm happy to take a look at what you have. If you have what you need, I'll tell you. If you don't, I'll tell you that too. Or if you ever have any questions, or you ever have any concerns, or something doesn't seem right, let me know. We can talk about it. Or I'll say, I'll ask them, all of the contractors know what their experience mod is. And I'll say, what's your experience mod? And when you ask somebody that question, immediately they realize that you know what you're talking about. Because if you didn't know to ask that question, you're probably not as in tune with their business as you should be. So if you're a
Right.
contractor and your experience mod is a 120 or 130, bingo, now you and I have something to talk about. Well, let's talk about the kind of claims that you're having. Are you having auto accidents? Are you having lifting accidents? Are you having broken bone?
Mm.
Is it a guarding issue? So you come at it. You never try to sell somebody something, because we're already considered down there at the bottom, right?
Right.
Like with the used car salesman. So if I come in there pushing my card at you saying, let me quote your insurance, you're not going to respect me. But if I come in and say, listen, I'll have a meeting for your people and talk to you about what you should have in your certificate requirements so that your subcontractors are protecting you on the job site. That's a benefit to them. And I can guarantee you that their agent probably has never offered to have a certificate seminar for them. I'm not
Mm-hmm.
selling you anything. I'm coming in and offering you a service that's going to help you be better, potentially prevent a claim or at least redirect a claim to your subcontractor. And you're going to benefit from it, and as are your people. And then they view you as the professional. So it's cumulative. It doesn't happen on the first time that I meet somebody in a networking event, but after a while, and then I've had people just approach me and say, I need you to be on my board. I literally had somebody approach me and say that to me. You need to be on my board. So you get on the board and then you become the membership chair. And then you're sending out emails to everybody about membership. And you see it at the bottom, they see at the bottom, oh, there's Lorin Montgomery. She's the membership chair. And oh, I see she's a member of National Association of Women in Construction because I have all that stuff on my signature line. Oh, and I see she's involved with Rebuilding Together. That's another construction organization. So it's cumulative, and they see it, and you're not trying to sell them anything. You're providing them with an opportunity to grow their business and meet other professionals. So networking is a great tool, but you never, ever, ever lead with, what can I sell you a policy? Can I do this? You always say, what can I do to help you? What do you need? A lot of times when I was doing a lot of networking, and this was back in the day, because when I was at Liberty Mutual, I never did any networking because I had a proprietary product. And I didn't need to be better than every other agent because I had a proprietary product and I knew stuff. So it didn't matter. But then once I left Liberty and I became the broker, like every other broker in the room, how did I differentiate myself? I did a lot of networking and I developed relationships with other professional people that recognized the value that I brought. Mm-hmm. So I would connect with CPAs and I would connect with payroll people and I would connect with those to bankers and offer ways to help their clients that maybe their agent hadn't thought of. But it's never selling a policy. It's always educating. And in the process of that, that's how you get your clients and you get loyal clients.
I love it. I love it. So what happens? Okay, let's say you connect, you're good, you're building your book of business, right? You're reaching out to your clients, you're educating, right? You're touching them multiple times per year. What happens and how does a really great person in the commercial insurance space deal or help our clients over that mental hurdle of the price increase, the decreases in coverage, the changes in wind hail coverages, things like that? Because it is very hard, I think, emotionally, because we just get bombarded from so many different avenues so consistently, every single policy, every single day. Now all of a sudden we may have a wind hail exclusion on this one, and then they want to be able to increase the property value to up like $800,000, and all of a sudden we have like an 50 to 80% increase, because not only do we have a 40% increase on its own, now we're also increasing and we're doing this and we're doing that and we're reducing coverage. How do we help our clients? I know the education piece consistently throughout the year, but how do we help them when they're in that emotional state and maybe they're like, oh, I got a business, or they're like, oh, now I'm gonna have to fire everybody because now I'm gonna have insurance. How do we help them through that emotional challenge? Because dealing with that every single day is tough. And I know that that's one of the things that so many people are just exhausted with right now.
It's such a great question. I was teasing with somebody. This was probably, I don't know, 6 or 8 months ago. I said, I just said, I'm so sorry. I'm so sorry. And like, that's all I do all day is I am the doormat. I let people yell at me. And I'm so sorry. I'm just so sorry. I'm so sorry. I wish it was different. What we do at Brown and Brown is we're very diligent about marketing. That was an opportunity I didn't have at Liberty Mutual because I was a captive agent. So now I'm on the other side, why sell for one when you could sell for all? And I make sure that my team is really diligent, especially in a hard market with the marketing. And then we always provide a marketing report. And, we again, educate, right? We went to 15 property markets and this was the response. We went to 12 liability markets and this was the response. So we know we've done our job, but there are times where you just need to just let them yell at you and let them say what they have to say. Like you said, I'm going to have to fire everybody. What am I going to do? I'm so sorry. I wish it was different. That's it. There's nothing more you can do. You just have to let them say it, let them get it out, And if you know in your heart of hearts at the end of the day that you did everything you can do for that client, and he's screaming, I'm not going to renew with you,
Yeah.
and whatever it might be. If you know at the end of the day that you did, and you and your team did the very, very best, then you just let them say it. You take it on the chin, and you recognize that you don't take it personally because you know you did the best you could. And in a market like this, where some of your clients may literally be trying to decide between keeping an employee or paying their insurance premiums,
Mhm.
you have to realize that it is not about you, and that if they yell at you and they're inappropriate, it's not nice and it's not what you would hope for, but it's a stressful, difficult situation. And if you know you did your best, then that's got to carry you through.
Yeah. I think one thing we try to keep in mind is, like you said, we have to do our best. We have to let the client make their own decisions for what's best for themselves. We can't think for our clients. I think too, sometimes we will get a renewal or we get something that has these changes or these addendums to it or whatever. And also we're like, oh, and sometimes we freak out before we even talk to the client about and hear the fact that they're freaking out. So one of the things I try to make sure that I tell my team is don't think for your client.
That's
Don't
great advice. Yeah.
think how you would respond because you don't know what their business is doing. They may be in a huge boom in their business and they're like, all right, no problem. Right. And they may say, hey,
Now I'm what planet?
you never know. We've had a couple of people where we're like, hey, this is going to be a really big problem. And they're like, oh, that stinks. Okay, hold on. I'll write you a check. And we have other clients that have
Yeah.
like a $200 increase and they're weeping and gnashing of teeth. And you're like, hey, dude, this is nothing compared to what we get from all these other clients. And so I think sometimes we need to not think for our clients. Like you said, I love what you said about not taking it personal. It is their reaction based on what they have going on. And for all the listeners out there, I want to make sure I bring in another piece of this too, is you don't know what they have going on their side. So some businesses, maybe they're going through, and I hate to put it this way, maybe they're going through a divorce. Maybe they have a business partner that they have had a splitting with of the ways mentally, and they're trying to figure out how to deal with it, right?
Yeah.
Maybe they've lost a family member. Maybe something is going on their end that has nothing to do with you or insurance. You just, I hate to put it this way, happen to be in the wrong place, the wrong time, or the right place, the wrong time. I don't know. And sometimes people just pour out their frustration to
Yep.
somebody who's not even involved in that situation. I
Right.
mean, you don't know. And I know that on the personal line side of things, there's so many times that we come into this and people are like, oh, I just got in a car accident, or I just, my wife, we just had to put my wife into a facility like 3 weeks ago, and I'm trying to da 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 da. And I think when we stop and we listen to our clients, they tell us these things sometimes. Like sometimes you're like, oh, I'm going to go out of business because this insurance increased. But then they're like, and my wife just had to go into a facility. And you go, ah, chung. So by listening and just
Yep.
letting a client run with it, we can find that point of empathy. And I think it's also going to help us to understand that we are not always the money, the insurance, the coverages is not always what the person is reacting to. Sometimes it's a conglomeration of a lot of things that we have no idea are even going on.
Totally agree. Yep. There's a meme or something that says, you never know somebody's story. Always be kind.
Right.
Yep. Then I completely agree with you. Yeah.
Absolutely. We have a client that called us this year and he's like, okay, I got to cancel these policies. And our team was like, oh my gosh, no, they were decent sized policies. And finally, our team member just let this person talk. And this person was like, yeah, I've been diagnosed with cancer. I've got to go through all this stuff. So I can't do that. And it was a a person who was doing construction. He was like, I can't be on site for these things. I'm going to have to go through chemo radiation at stage 4. It's blah, blah, blah. He's like, I don't know that this is going to happen. He goes, but I got to keep my auto. So he kept his auto because he's like, I hope that in 6, 8 months, we're going to be back up and running once my
Right.
treatments are in a better place. So, but by listening and not trying to give answers, just trying to empathize and listen, sometimes we hear these things that all of a sudden we can, I hate to use the word bond in difficult situations, but we can be there for our clients
Yep.
because sometimes it's not always about insurance.
Right. No, I completely agree with you. Yes, and that will carry. That's part of the building the relationship,
Yeah.
right? You're not just the insurance agent. It's a valued professional, and then in this case, you're transitioning more into confidant or friend or whatever it might be. One of the other things we haven't really talked about it very much, but one of the other things that I strongly recommend is try to, whenever possible, work with larger size accounts because if you build a book of business, um, when I was at Liberty Mutual, God, so long ago now, I don't even remember what the minimum premiums were, but they kept raising them. And
Right.
then when I was at the brokerage, same thing. And now Brown and Brown, our office particularly, because our office is so big and so successful, that they keep raising the minimum premiums as far as the size of accounts that we can work. And I know it's very easy to say and not as easy to do, but it's a lot easier to manage a book of business of say it's $1 million in revenue and it's made up of 100 clients versus 500 clients, right?
Yeah.
Because the revenue is the same, but the number of clients, the number of policies, the number of phone calls is so much disproportionately higher when you're dealing with a smaller
Mhm.
business person, right? And they're not going to be as sophisticated as far as understanding what we bring to the table as professionals. They may be just trying to keep their doors open, and if somebody else can save them $500 on a policy, they'll throw you to the curb, or they'll BOR
Yeah.
the account because they don't see the value. Whereas if you're dealing with a larger account or more sophisticated businessman, more often than not, you're not going to get as many questions. You're not going to have as many issues with non-payment of premiums, with the bills getting missed and all of that kind of stuff. So that's something that I would counsel anybody as far as what they're looking for, as far as building a book, growing a book. We had talked a little bit earlier about finding a niche and something that you're really good at. For me, it was always construction. We have people in our office that specialize in condos and HOAs. Bless their hearts. I could never, but okay, fine.
Right.
And then we also have in our Brown and Brown office, we have a very high end personal lines department where they're dealing with people that are 3, 4, $5 million homes.
Yep.
So if you've got that niche and you're dealing with somebody that's a larger business person or a more sophisticated business person, I think you're going to find that in the course of your career, it's going to be less unsatisfying than it would be with the smaller I mean, I can think about the clients that I've had over the 40 years and the ones that were the most difficult and the most demanding and the most unreasonable, and they were all the smaller businesses, and many of them ended up going out of business because they ran their businesses so poorly or they were just
Yeah.
so unpleasant to deal with that they couldn't get any people to do business with them. So
So
that's
true.
a that's a really really big one right there.
Yeah. And I think that also goes into your happy factor for your team, right? That if they have less clients and or they have a better relationship with those clients because they have the time to talk to them, they have the time to, whether, like you said, the phone's not ringing off the hook with your tons of smaller policies, whatever. You have a happier team, I think, as well. And I think that the work life balance is a little bit better as well, and the profitability across the board. I could totally see that 100%. And I know that's
Mhm.
something in our agency is we are defining, because we in my agency we started personal lines. We've been personal lines vast majority. We did a little bit of commercial, not a ton, but an okay amount. Then we bought in another book for diversification. Um, and I mean, and we're really trying to make sure we're building a diverse book, but at the same point, we want to make sure it's a solid book and a good book. And I do know for us, if somebody's under a certain level of income or premium, we just kind of go, this is it. Like we don't put it out to market and reshop it every time. We don't do this, we don't do that, we don't do this, we don't do that, right? If they're standard lines and if they're under usually around $10,000 in premium per year, we're not even gonna like we renew it, we move on. That's really all it is. We don't put it out to market, we don't sit around and worry about it, we don't call them 15 times a year, whatever. But at the same point, we do try to make sure we're nurturing those larger clients because that's where we want to go long term. Um,
Agree.
and I think we need to think shrewdly as either people building a book in sales or the account managers or the owners. What do we want? And how do we want the culture of our book, our team and our clients and our revenue? it's not just about sales, it's also about our culture. It's also about what are we doing? What are we bringing to our clients and how can we serve them? And if you've got, like you mentioned, 500 clients, can you really educate them very well because you're so busy blah 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 answering the phone, sending emails, doing all this stuff, that you don't have the time to be able to send out these really informative emails or be able to speak at their events or be able to reach on out and talk to them about their coverages in better detail, because you're so busy on those $10,000 premium accounts or
Absolutely.
whatever. And I think that we really need to take that into consideration, whether or not we're in sales or account management, or if we need to bring it up to an owner that we work with or for. I think it's a really, really important conversation, especially like we said, this market's not going back to where we were 15, 20 years ago.
Yes, agreed. And the other thing is too, is if you want to be that agent that consults and educates, like I built my 40-year career on, how much consulting and educating can you do on a guy that's got one vehicle, and is paying $10,000 a year in premium? You want that roofer who's maybe got 30 vehicles
Yep.
and hired. This was an amazing, amazing story that I, in 40 years, you have some of these stories, right? There was a guy that was a roofer, and after one of the big hurricanes, he hired a bunch of people just because he needed bodies. And he didn't have a safety guy. And he didn't have, workers' comp controls in place or fleet safety pro or any of that. And he was having accidents and guys falling off the roof and burning themselves and this, that, and the other thing. And his experience mod went from, I don't remember, I'm going to lie, from a point 80 to a 120. And then, of
Mm-hmm.
course, now he's no longer competitive, right? Because you can't bid with a 120 mod against somebody who's done the right thing all along. So his auto went through the roof. Roof, get it? Roofer, his auto went through the roof. Sorry. His auto went through the roof. His experience mod went up, whatever, whatever. And then he got religion and he realized, I need to do something.
Yeah.
So he gets the safety guy, and his experience mod is going to stay high for a couple of years, but now he's doing the right thing. And I came in actually as all of this was happening, and I'm like, okay, let's tell your story to the carriers. Let's make sure that they know what happened. That you didn't, in fact, this is a conversation that I'm having with that young woman that I'm mentoring. I explained to her that every time I bring in a new client, I do a narrative and I tell their story, because the underwriter or the wholesaler is sitting at their desk. And back in my day, it was paper, right? You send them a stack of paper. Now it's a stack of PDFs. But you're just a stack of paper to that person on the other end. You need to make your client's story real to them. And you want to go through the claims history. You want to explain what happened, why they were having claims, what they're doing differently, what the expectation is as far as, okay, the mod is here, but it's trending here, and this is where we expect it to be, and all of that kind of stuff. So when you're telling the story of your client to the carrier or the broker or whatever, you're differentiating yourself from what every other broker does. I don't know that most brokers will actually sit down and do a narrative. I think they do their reports, they shove them out to however many markets, especially if there's competition, they want to block the market. Well, if you block the market with bad information and all you're doing is sending an accord and a loss run without explaining what the loss run is and how it got there and why it's not bad anymore, well, of course you're going to get a declination. You need to take that extra step. Taking the step back, are you going to do that for a guy that has one vehicle? No, you need to be looking for the contractors. So you asked me, and I'll circle back around to the question that you asked. If you decide that you want a niche in construction, go to some of the construction related groups. I was involved with NECA for a while, National Electrical Contractors Association. Unfortunately, I was a woman, and that was a good old boys network.
Okay.
So I have a couple of accounts, but probably not as many as I should. And one of the guys actually confided in me. He says to me, kiddo, they're not going to buy from you. He says, as good as you are, and I've told them how good you are and how much money you saved me, they're not going to buy from you. They're going to buy from the other guys. So, but you find something that you like. Now I'm on the board of the National Association of Women in Construction. There's a group down here called CREW, Commercial Real Estate Women. It's circling back to your Power Podcast Women, right?
Yeah.
All kinds of women's group. There are women's CPA groups. So how do you find those groups? Go on the internet. We're so fortunate now that we have the resource of the internet, which 40 years ago did not exist, by the way. You didn't have Hoovers, you didn't have Dun and Bradstreet where you could go online. You didn't have that. By me, it's sunbiz.org that you can go in Florida and find out who owns a company. We didn't have all of those resources. So, if you're interested in something, how do you get involved? Do your research online. If you decide that you're interested in manufacturing, in Florida, we have the South Florida Manufacturers Association. Great. Show up, Google it, find out when their meeting is, show up, introduce yourself around. Find a couple of people that have a smile on their face, go stand by them and start a conversation. And that's how you do it. It doesn't happen instantly, obviously. I mean, after a while, it develops momentum, and then when you walk into a room, everybody knows who you are. But if you have a passion, right? The most important thing about in our conversation, our pre-conversation, you were talking about that. You have a passion, and you don't look at it as a sale, but as an opportunity to help somebody or build something or improve a situation, make it better than when you found it. You'll do very well, and you just have to figure out what your best approach is. I would always say, do the networking, develop a circle, a center of influence. If you can find a niche, so much the better, because then you're going to be looked at as the professional and be the person that everybody wants to go to for advice, because eventually they're going to need help with their insurance.
Yeah.
Person.
I love it. I love it. Well, Lorin, you are amazing as always. And I absolutely I just could sit here and talk to you all day, to tell you the truth. So I love this. This has been amazing. Tell me a little bit about, if people wanted to reach out to you, how can they reach out to you so that way they can maybe if they have additional questions or anything like that, how would you be available if people have questions?
So the email is lorin.montgomery@bbrown.com. My cell phone is 954-732-9453. If I'm awake, my cell phone's on. You can call me anytime. But if I don't recognize the number, I'll probably let you go to voicemail, and then I'll call you back. But I love to help. I love to mentor. I love to educate. So feel free. I'd love to hear from you or your folks.
I love it. I love it. Well, you have been amazing as always, and I'm so grateful. So I'm also grateful. We have a great friend in common. She's amazing, and she has connected us. So I want to give her a big shout out to down there at the Bunker Risk. And so if you have other amazing women in your life who are doing wonderful things in the insurance space, make sure to reach out to me, because here at Power Women in Insurance, we are here to be able to help women across the board in every single aspect of the insurance space, to be able to find their voice, to be able to have the career that they want, and to be able to go on out there and knock it out of the ballpark. So we're thankful for you, Lorin, today, for joining us. I definitely appreciate you.
Thank you so much for having me, and happiest of holidays.
Happiest of holidays to you as well. Everybody join us every single Wednesdays. We have another amazing woman. Come and join us on all your favorite places that you can find your podcasts, on Apple iTunes. You can do Spotify, Google Podcasts, all the different places. Check us out, because we're making great moves in the insurance space, celebrating women. Everybody, have a great week.